we should not overtrade. All right.
Can you clear the chat? Because you've drawn on the screen.
It's okay. So what you can do, stop sharing your screen, and then once I'm done, you'll continue. So I can stop sharing your screen.
You guys, I can see you guys that some of you are drawing. Can you clear what you've drawn? Like where where's the annotator, click that thing that looks like a dustbin, yeah? Then press it clear. Clear all your drawings, yeah? Because I can see that you guys all annotated. The other one has already cleared. Nice. Okay. So let Crazy take us through.
Let me start with a recap for today. Let me start with the recap for the setup that I shared with guys. It was good. Right. In fact, actually, I had 2 trades. And one of the trades was, I shared on Discord, but one of the trades never came to my entry. There was this one. I was, let me see, just a moment, guys. There was this setup of around 100 pips. Actually, it was around almost 100 pips, but it never triggered. Can you guys confirm if you can see my screen? I need you guys to confirm if you can see my screen. Guys, kindly confirm if you can see my screen. I'm sharing gold. I'm sharing gold. Gold.
Yes, visible. User. Okay. So.
All right. So you're good to go. So in the morning, for the intraday perspective, I was being guided by 1 hour. I went all the way to 15 minutes. I was trying to identify an area of liquidity. And I was able to spot this structure. Clearly, we had, there was this price action whereby the market created this type 1 area of liquidity. And then this is the zone that created a break below these levels. I call it an impure level. And then after that, you could see this structure, then boom. So the reason actually I love gold is because of the aspect of it can easily give you good RR if you know what you are doing. So after identifying this area of liquidity on 15 minutes, I was able to, literally our stop loss was supposed to be here, but because of using different brokers and all that, you need to give it room for breathing. So the stop loss was supposed to be 221 pips, and our target was at this level. That is an RR of around 1 to 9. But because of the stop loss adjustment to give it room for breathing, I had a stop loss of around 35 pips, which was giving us an RR of 1 to 5. So when you check out these, those guys were in our Discord. Just a moment. Just a minute. those guys who are on our Discord, we share this idea. I shared this idea while price was around this level. And how I was able to refine that zone, I went all the way to 3 minutes. And on 3 minutes, I could see we had this liquidity engineering. Simple as that, nothing much complicated. That's where my entry was. That's where my entry was supposed to be, or that's where my entry was. Yeah, actually, exactly here, around that level. That's where my entry was. So when you actually play price, if you are, the moment we're going to understand the aspect of liquidation, life is going to be easy. So you see, after the market, the people were asking me in my own box, why is it that your entries are always the next? I mean, your TP is always an entry for the next trade. Because I understand where my liquidity is, because price moves from liquidity to liquidity, key levels to key level. And you need to understand how to synchronize all these on higher time frame, lower time frame. You need to understand when you're doing intraday, you need to understand when you're doing swing trading and all that. So as far as I'm concerned, as much as the market was coming to this level, I knew very well price will react from this level and continue buying before maybe we think of more sells. And on the same 15 minutes, this was a swing point. This was a swing point that initially price traded above it. So it's like a shift for me. So when this market was coming, I expected price to come to this level. Now this area becomes validation and invalidation point. So I expected once price comes to this zone, you're going to continue maybe buying, right? And actually, if you check what happened, the market went all the way to that. The market went all the way to that area of liquidity. If I'm going to that area of liquidity, let's just play price. After price went going to that area of liquidity, it went to our take profit. The market tapped, came to our TP, and again bought. So even on the lower time frame, this one, you see this reaction here, it's enough. This reaction here, there's something that are a bit deep. We might not really share here. It will cause most of you to ask a lot of questions. So that's why if you really need this, you have to join our mentorship session. Maybe I was not intending to. I think I was done to teach people Forex. I even told people I'm no longer teaching anyone Forex, but hey, I get a lot of requests. So I think tomorrow I'll decide of an offer that I'm going to give, and I'll only take maybe maximum of 10 students, these people will be taught in a group. I'll give one of the craziest offer I've never given in this industry. So make sure tomorrow you're here. I'll only give a chance to 10 people. So get ready. These people will be taught within 6 weeks, the whole course, and then they'll be taken into a challenge whereby they'll be taught how to grow an account from $10 to $100. Before now, we teach you how to maybe start making, before you start handling millions of dollars, you need to know how to handle little capital, because you can't shoot from, if you cannot manage account of $100, you can also not be in a position to manage an account of 1 million US dollar or even $10,000. The same way you can blow $100 is the same way you can blow 1 million US dollars if you don't know what you're doing in the market, right? So I think that's something that we'll talk about tomorrow, and we'll figure out the best offer that we can give. And also, anyway, so price came to that level, stopped, took our TP, that was at least 1 to 5R. If you're trading a prop firm, you risk 1%. This was enough to give you 1 to 5R. If you're trading an account of $10,000, let me show you something very quick first. Let's say if you're trading an account of $10,000 or 100K USD, the stop loss was literally 35 pips. And let's say you are risking 1%. If you risk 1%, I hope you guys can see my screen. If you risk 1%, you're supposed to use a lot size of 2.8, so that if you lose exactly $1,000. If you're able to hold the trade to take profit, it was supposed to pay you an RR of 1 to 5. So that's $5,430. Simple as that. That's what I can. That's the only trade I gave out for guys today. The other one, it was a mistrade that This was my last shot for the day. Sometimes I find guys having trades they don't have take profit. Before you execute a trade, you need to have a plan, because you have to trade the plan. You need to have a plan before you execute that trade. Once you have a plan and you execute the plan, things gonna be easier for you. So I think up to that point, I really don't have much to say. I'm going to give Sage is going to take over from that. Is going to talk about tonight's topic. In case there'll be questions, feel free to type them on the chat section. Also, if in case you have network challenges, you can go on YouTube on our channel and stream from there. So that is it. You guys welcome for tonight's session. We're going to have this session all the way to around 9. We shall end at exactly 9:20. In case of questions, keep asking. So I'm going to stop sharing, and Sage is going to take over.
I hope everyone can hear me. So if you can hear me, kindly.
Sage, your audio is kind of very low. Maybe you need to come near the screens. I don't know if it's your settings. Your voice is kind of very low.
You guys can hear me now?
Yeah, we can get you loud and clear. Guys, confirm on the chat section, because from my end I can hear him. On the chat section, the 40 of us, kindly confirm on the chat section if you can get Sage and if you can as well see his screen.
Yeah, because if you can't, then you have to know. Okay, it's clear. Audible. 2 people. So the rest can't see or hear me. Oh my. Okay, so you guys can hear me. That's all I want. Yeah. So now that I see that you can hear me, can you guys see my screen? Okay. Can you guys see my screen? Because I want to talk about cycles, but mostly I'll start with shift. What's shift? How is it supposed to be, or how is it supposed to help you, and all that? Yeah, that's the first thing. Okay, everything is visible. Very nice. So since everyone can see, just a moment, I want to change this writing so that guys cannot say that I could not see my text. Okay, so on today's session, I'll be talking about something. We have something that we call. Just put it up on the side. We have something that we call agglomerations. So now this thing that we call agglomerations, we have 7 agglomerations. So I've used a very big word. That word is a bombastic word. What does agglomeration mean? I have to search up for Google. I can define it, but I just want. Agglomeration is a mass or a collection of things. So I told you we have 7 agglomerations. So we have 7 different steps on how we take our specific trades. So these agglomerations, they're like what determines how we trade. So that is agglomeration. Today I'll be talking about, it's called, pardon me, just a moment. Just a moment. Okay. So we have 7 different agglomerations. There's confirmed flow, there's non-confirmed flow of liquidity, there's normal areas of liquidity with V to V analysis. We have sub area of liquidities. Let me just paste them here. Our 12 agglomerations, our 7 agglomerations. So these agglomerations that we have, yeah, they are our basis on how we trade. So when I say that I'll be talking about I'll talk about the first agglomeration. I don't want to get like, in a way that people will feel that they have like their head is going to explode. So I'll make it as simple as possible for everyone to know. So the first is called confirmation of flow of liquidity. Sawa sawa. The other one is non-confirmation of flow of liquidity. I think, I don't know if but Swayze talked about V2V areas of liquidity. I don't know if he talked about all of that, but today I'll be handling the first one. Yeah, I'll be handling the first one and showing you the examples. Unconfirmed, maybe we can have a different session about it later. But I want us to.
I didn't talk about the agglomerations.
Okay, there's no pressure.
Right. Okay.
As long as they've been getting or they've been understanding, that's all that matters, by the way. So number one, we're talking about the shift. So what's a shift? That's number one. So a shift, it's technically, as the word says, change. It shifts from bullish to bearish. There are only two sets of shifts, bullish or bearish. So if we have two shifts, that means that we are expecting or anticipating only two things to happen in the market. It will go up or it will go down, nothing more, nothing less. So let me use major pairs. And if you guys cannot hear or see my charts, tafadhali, you guys should speak up. So I'll talk about this from a daily for a daily chart, and I'll go from a daily, weekly, monthly. I'll be using those charts. I won't go beyond that. So when I talk about a shift, this is technically what I mean. So when I talk about a shift, this is technically what I mean. It's completely different from what you guys know as change of character. Why? Why am I saying it's completely different? Where you put change of character, most of the time from what I've seen, there are people who will put a change of character here because this is a bearish candlestick. There are people who put their change of character here. And there are people who say, since we had this one and this one, this is where we will put our change of character. Or they'll say, this one wasn't enough to say there was a change of character. This is where there is a change of character. So for the shift is different. And like you guys know, the way we trade something very definite and something very precise. And what do I mean by definite and precise? I mean, you can see it happening in the chart. After you see it happen in the chart, you know this is what is going to happen. Like monkey see, monkey do. Like it's there. You can't miss it. You can't miss it. Sawa sawa. So I'm going to talk about a shift, how to mark a shift, how to know how a shift took place. So I'll start by theoretical elaboration. When the price is moving like this, it's bullish, right? It taps there. Then after doing this move, it comes here, then it breaks structure to the downside. Now, this is what you guys will be seeing in the line chart. Sawa sawa. The line chart is what will guide you to know if we have had a shift or not. The line chart is what will guide you, not your. Okay, the line chart will help you, but it is not the best. I'll elaborate why it is not the best, but it will help you. So when you see this, price closes below this week. Now I said I'll tell you why it is not the best. It's because of this. When you see price has closed below this week, a shift has occurred in the market. There's this structure that was made, price broke above there was a break of structure to the upside. After you've seen the BOS to the upside, what color is this? After you've seen the BOS to the upside, then you know here that you've had your shift. You can call it market structure shift the way ICT guys call it, but for as we speak currently, it is just a shift. There is no need to complicate. Yeah, it's just a shift. A shift is more like it is hinting, it is telling you, I am going to do this next. Sawa. And if the market has told you I'm going to do this next, what does that mean? It means once I go back up, you will be looking to sell me to maybe this level or below. So depending on the market cycle that you are in. Now, this is a confirmed. So a confirmed. What do I mean? You won't find wicks coming above and closing like this. You won't find like a wick has come and closed above like that. Most of the time you'll find the wicks were here. Sawa sawa. So even when you're looking for your entries over here, it makes sense you taking your entry on this QM or the strong low, depending on how you would like to call it. Your stop loss will be maybe on the wick here or on the body here. It doesn't really matter per se, as long as you just get to understand that specific, that small aspect. Now, this is how a shift looks like in a candle, a line chart. Sawa. There's the highest point. The highest point. You look to the left, a structure that was created before this, like I repeat, this one should, this is, okay, this is not technically the break of structure. Wait, why is it doing that? Over here, let me select this BOS. The break of structure happened on this week. When the wick to body, when we had a wick to body break to the upside, that's when we had a break of structure. If we had, if this did not go above and break and close up above here, then that wouldn't be a confirmed. So I talked about you guys, so there was confirmed flow and non-confirmed flow. So for the confirmed flow of liquidity, it technically means we have confirmed that we are bullish. For the non-confirmed flow, ideally it's like it has not given you a confirmation, but you're still taking an entry. That's technically what non-confirmed flow means. Yeah. So if you see that break of structure to the upside, weak to body, not weak to weak. Yeah, not weak to weak, weak to body. Or if there's a body to body, it's still okay, as long as the body closed above the wick or the body. But most of the time, it's usually wick to body. That is the confirmed flow, number one. Sawa. Do we have any questions before I continue? Ama, you guys are okay? I can continue. We can look at examples. If you have questions, kindly drop them on the chat section. If you have questions, drop them on the chat section. If you have understood, tell us you have understood. Don't sit there and not say nothing. Elvis is good. Elvis is good. The rest are confused. Remove drawing. Good. It's good. Sun is good. Nice. So everyone, I believe everyone has gotten the idea of shift taking place and how to identify shift. So don't worry about how to use the shift for entry. First, you have to know how to identify. Because even me personally, at times, I get to misidentify shifts. Even Batsuizi, he can tell you, him himself, he gets to misidentify them. So if you're rushing for the entry and you've not really understood the concept, it's kind of you kind of end up messing yourself up, yeah? So it looks like, it looks childish or it looks small, but it's something very, very, very heavy. It's something very heavy, I kid you not. I am. So we've talked about a shift and it's wick to body. A body closes below the wick. So ideally, everyone has an idea what it is. Now, where are we marking that shift? Number one, njia ya kitoto ya kuchagua shift ni unakuja kwa line chart, unakuja una identify hapo, unachora hivyo. Baada ya kuchora hivyo, what you will come to understand, for a candlestick, the market usually shows body closure. Na kwa kila body closure unayoona, ideally it does not, when you see this, let me show you. Ideally, I don't think I'll get into the in-depth conversation about candlestick anatomy, but I'll just give this out kidogo kidogo so that you guys, a few of you, because I understand we have beginners, can have an idea. This is a candlestick. For the candlestick, assuming it's bullish, sawa. If it's bullish, it opened here. Let me write open text. Open. Oi, dakika mbili. Open. This is the open. This is if it's bullish. And this is the close. By the way, I suggest you guys go read or read about how a candlestick operates, because a candlestick, we have a different candlestick. We have 1 minute to, like, for every second, every minute, each and every one of those, we have a candlestick for every one of them. So, and if you have a candlestick for every one of them, it means what happens on the higher candlestick also happens on the lower candlestick. So if you are struggling to getting to know, like, how, when is the price going to move up, when is the price going to move down, if you're struggling with all that, go do your research on how a candlestick operates. It is sounding like it's very basic, but that is everything. Even if you decide I'm not going to be trading what Sage and Batswezi are showing, you can actually, oh my goodness, I made so many copies that I didn't. Okay, let me just delete them. Yeah. So this is high. Oh, my keyboard. Okay, high. What in the world is not happening? Leo keyboard yangu imeniamulia. I apologize, guys. I don't understand why it's doing this. We have the low. Now, what usually happens, there's usually no, like when the day starts, there's no high, there's no low, there's no close. The candle starts, I believe there's a time, there are brokers who you just see something like, it looks like a line. Let me just do it like this. You open a candle, you open a chart, maybe 1 minute time frame, then you just see like a small line like this. I believe guys have seen that. Yeah, this is a complete candlestick on the 1 minute. It means it didn't go up, it didn't go down. Sawa. This is a complete candlestick. Sawa. Then we have those candlesticks that it went down. If it goes down like this, like when it's going down, there's no wicks, there's no nothing. It's just like, it's just flat. I hope you guys can see whatever it is that I'm doing. Assume there's no, like, let me take this to the side. Yeah, let me take it over here. So candlestick opens like this. Once it opens like that, then it starts moving down. You won't see any wicks on the top side. You won't see anything of the sort. If you can observe a 1 minute candlestick, you will get to know what I'm talking about. It's very essential because that happens throughout each time frame, be it a 30-second time frame, 1 minute, 1 hour, 4 hours, daily, monthly, weekly, it happens. And once you get to know that, that's technically candlestick anatomy. You are very well equipped. So once it's moving down, and it's moving down, on the upside here, there are no wicks. On the bottom side, there are no wicks, right? Once price gets below, like it gets to, let me enhance this. Maybe you guys might be struggling to see it. Once it gets down, let's say it gets over here, then it backtracks. It starts moving up, even if it closes bearish. That's when you'll start seeing that wick. Okay, why did I just do that? When it's down here, this candlestick has not created that wick. But when it starts moving up, that's when you start seeing that wick is forming. So when you're seeing that wick is forming, it's technically telling you, I was there. That's why people call it a shadow. Yeah. When it keeps on moving up, like see, it was bearish from here to here, it was bearish. And when it was moving up, you were seeing that wick. That wick was telling you price was there. Oh my goodness. Price was there. And if it's telling you price was there, it means it's moving to a specific direction. So after it breaks the open and moves to the upside, you will see this wick that was created. Sawa. It sounds so basic, but it's everything that you guys will need. Everything going forward. And if it goes up and gets to a point, let's say it gotten to this point, then it starts moving down, it will form that wick on the upside. Sawa. Those are, that is what you call, it's in line with candlestick anatomy. We won't talk about it in depth, but guys in our Discord and in our community have heard about that, and they've gone through all that teachings and they've gotten even to know how to use the candlestick anatomy. Anyways, back to our main conversation so that you guys can get to know. I had to mention that so you guys can get to know what happened here. I said that the easiest way for you to help you identify a shift is to move to the candlestick, right? The line chart, right? Now, on the line chart, you can't see the wicks, yeah? And since you can't see the wicks, it makes it difficult for you to be able to get your accurate point on where the shift actually occurred. So if you were to put your shift on this is where the candle, if you check the whatever line chart, you'll see price moved like this. It came down here, then it went up. It didn't close there. It was something like it closed there, then it came like this, then pushed to the upside. Then it dipped. Sawa. This is what you guys are seeing on the line chart. And if you see that on the line chart, what if this week was long up until this level? Why did it not move to the downside? Yikes. Okay, this one. Okay, I don't know why it's not selecting. Let me just undo. If this week over here was long up until here, we will be marking our shift on this level. But since it closed over here, let me restart. Since it closed over here and the wick went up to here, this over here is where we had our shift. Sawa. And if that was our shift, that it means when price closed this one, not this one, not this week. We said body, week to body, not week to week. This is what told us that we are going to be selling. We can say a shift is a hint. It's hinting on we will be selling. So the question is where? Sawa. Let's take this. No, that's not what I wanted to take. I wanted to take this close. This one closed to the upside over here. I'm talking about this bullish candlestick. And this one is our highest point. So when you get a shift, what we're going to do, we're going to be taking ourselves at the areas above that shift. So we might have had something called a transition here. Yeah, there's transition, there's inside and outside formation. Yeah. So once we get our shift, then we know that price will come back up so that we can take ourselves. Yeah. Like I don't know if Batswezi told you guys, because what we usually trade and most of our entries, if it's not the bullish difference, okay, bullish different, bearish different, that is a pullback. So technically, in our heads, we should be like, we really know the trend. We're just taking action. We are entering the trend after we have confirmed we are bullish or bearish. So we will expect price to come back to these levels inside, then we will be taking a trade. So if you had enough capital and you're not worried about, oh, CG, my stop loss should be this amount, you will be looking at it like this. I'll be taking myself from here. And my first TP, let's see, let me put this to, let's say 5x. We wait. So this will be my first take profit at this level. Why? Because this is what caused the push to come to our level. But this, check this out. We're actually risking 177. Is it 177? Yeah, this is 177 pips. Take profit is roughly 300 pips. It can go lower. Yeah, we can actually decide we are going to target here. This is a 1 to 2.5. You will still be in profit, yeah, but it won't. You will still be in profit regardless, yeah. You can see if you decide I'm not taking it here immediately. I want to see something that confirms, but you know your stop loss is on top. So once you see why is it okay? Now that we are here, you can see I'm not getting in here. I want to see price reject this level first. Then this closes with the body below. Then you decide if price enters here, I'm going to take my trade there. I'm going to put my stop loss there. You will come and put your trade here. After you've put your trade there, you put your stop loss there. So this one comes, taps you in. We've reduced your risk. So if that one was 1 to 2, it is changed to 1 to 2.7. If you are taking this up to here, it's 1 to 4. So you're risking 1, you're going to get 4. So you tap there and wait. Yeah. So ideally, ideally, you can see price gave you some pips over here up to this level here. This is called an open break. We'll get to know how we use open breaks in the future. Don't worry. Then it went ahead and took you out. Even it took out our high. You can see we had that high. It was taken out by like some few pips. I think maybe let me check how many pips. This was our high. It went like 31 pips above that high. So don't worry, we even know how to take sales from there. Never be afraid. So it came here, it gave you a few pips. Then after getting to this open break here, if this was your entry, after getting to this level over here, it gave you a sniper, clean sniper. It gave you 1 to, this is 1 to 2, exactly at 1 to 2. Yeah. Then it came back. It gave us, there was this buy that was here. We can talk about how this buys came at a later date. And then after that, it came back, tapped that area, then it sold again. Yeah. But this shift was the ones that gave us this. There's a reason why we could have gotten these entries here. We could have sold here because this is an area of liquidity. I believe we were not, I don't think we'll have the time because it's just a week. Like this is a week of mentorship, and you guys actually, but Swayze told you that we have like six weeks of mentorship, like proper mentorship. Yeah, that is for people who are not beginners, because if you're a beginner, then we have to take you through the beginning aspects. There are things that we need to tell you. Yeah. So if we were to trade, we will have looked at this area of liquidity here. Ideally, we will have gotten in at this level here. This will have been our stop loss on this week over here. Then after getting to that, we will have targeted this here. This is for guys in the community. A majority of guys in the community will tell you how we actually get such entries over there. You get that a small stop loss. You take that. When it comes here, you'll buy it. And when it comes back up, you get to know. Now, this is number one example of a shift. That is number one shift. Now, if you have noticed, you also got this other shift over here. You got this other shift. So after getting this shift, ideally we can say we got this other entry here. And this one was telling us our stop loss was going to be here. So our work is to wait for price to come back to this level again. Put our stop loss there, then we wait. We target where price reversed. Target there. And the price, I think it's the current date, yeah? The current date. Yeah, I think it's the current date. So ideally, if price in the future keeps rallying to the upside, we'll be looking for sells at around those levels. If you will be in our group, then we'll have refined and gotten a stop loss that's much smaller that we can head to the downside. Now, that is from the daily aspect of things. Let me remove that. Let's go to the weekly aspect of things. Now, on the weekly, let me cut then look, what do we have here? Price keeps moving to the upside, to the upside, to the upside. So I'll pick a random price, let's say here. So when I pick here, we get to see, we are having a shift from here. The reason I'm spotting them really quickly, it's because I'm used to it. Actually, I just anticipated that this was the high because price looked like it was ranging. Then I anticipated that. So when we get that shift, if prices closes, this is something that I feel like it's additional and it's needed. If price is moving like this, it's moving to the upside like this, it comes back, then it comes, breaks that structure to the upside, then it comes and does this. Then it goes to the downside and breaks this. This is called an inside formation. But if price does this, it breaks this structure, then does this, and then goes back down again and closes below this level. This level over here, let me just name them with this box. This one over here is an inside. Why is my keyboard not writing again? Inside formation. That is an inside formation. It means the formation was made inside the shift. The formation was made inside the shift. That's why it's called an inside formation. You guys, you get to understand how easy we trade. Like, it has simple words. We don't use complex word like promulgation block, CG proportion block, and all that. It's as simple as possible. Yeah. Inside formation. This one is called the outside formation. So on this, you have an inside formation, you have an outside formation. After you've had your shift here, let's say the shift was here. So if you have an inside and you have an outside formation, you first have to wait when price comes back. Inside formation, outside formation, it's an area of liquidity. Yeah. And inside formation and outside formation, it's if Batswezi has told you they are RAT V to V, we talk about validation violation. So when the area gets violated, that area of liquidity was liquidated. So when price comes back into the outside formation, you take your trades on the liquidity engineering, then you ride it to your first TP is going to be here, the next TP is going to be here or the at low, whatever, depending on how you analyze the markets. That's how you identify a shift and how you use a shift. You use a shift on the inside formation, the outside formation. And if you don't see an inside or an outside formation, you check for liquidity engineering. So now let me remove that. I believe I have not confused anyone. And if you have any questions, I have Batrizi there to help me answer your questions. And I said, if you feel like your question is stupid, ask. If you feel that your question is not stupid, ask. Yeah. If you feel like you have all the answers to the questions, then well and good. I see no reason why you should be stressing yourself. This is the weekly time frame. If you can see, we had a shift here. You have this formation, we have this formation. So this was in 2023. The price moved. You're wondering, where is it going to go? Where is it going to go? Okay. Now, if I pose it there, you have this outside formation. But this outside formation, you can see over here, it's something like it broke structure to the outside, to the downside. After breaking structure to the downside, we now have this. We have this. And we also have this. Now that we have those two levels, we want to see price come up here, we sell it, then it goes up, we sell it, then it goes back up there, we sell it. Because why am I saying it goes up, we sell it, goes up again, we sell it, then it goes up again, we sell it? Because price is fractal. What does fractal means? It keeps fluctuating. So since price keeps fluctuating, it means that it is not like price is not constant. If price is constant, it means any fool can trade. Because if it keeps moving like this, you'll know when it comes here, I'm going to buy. When it comes here, I'm going to sell. So, and people will be millionaires. Yeah, it comes here, I sell. It comes here, I buy. It comes here, I sell. Yeah, we will just be seeing markets that are on a specific range. But guys know that markets do not do that. Anyways, let's continue seeing what happened within this year. Price came to that level, it broke. Then guess what? It showed reaction on this inside formation. If we refine this, we could have gotten a trade over there and sold it. And why am I saying that? Let's go to the daily time frame. If you check on the daily time frame, what happened here? We had some liquidity engineering that was around here. Sawa. And that liquidity engineering, it showed us that price had not consumed all the liquidities that were lying there. Remember, this is on a daily time frame. Sawa. So if you're taking a specific trade from there, maybe refine it, because ideally, as much as these pips are like how many? These are like 100 pips, and you've already gotten your 1 to 2, 1 to 3, whatever. At the end of the day, we refine our trades. Yeah, there was liquidity engineering that was lying here. Trades were taken from the liquidity engineering, then price kept on dipping. You can see price kept on dipping. And this level over here, you have this open break that I told you guys about. Open break. It opened and broke above that open. So that's why price reacted from this level. If you watch, price reacted from the open break. It did not close below, then it rallied to the upside. Yeah. Boom. It gave guys another entry that was here. Then it went. Where did price go to? You guys can attest. This was an inside formation on the weekly time frame, and it reacted from that inside formation. I think that was like I told you, it will come to this level, we'll sell. We sold from here, then it went to that level, we sold again, then it's gotten to this level, we've started selling. Like you guys, I believe you're getting to understand what I mean. And remember that I talked about support breaks becoming a resistance. This was I talked about support break becoming a resistance break becoming a support. Yeah, this was a heavy resistance. You guys can see it broke, it became a support, push price to the upside. Yeah, I think you guys are getting how the concept can be linked together. Like it's not something different that you guys are learning, it's just the same thing. Price ranged, you guys can see this is the inside formation. Price reacted once, twice. Whether you could have gotten Mogoka kindly clear or erase what you've drawn. Thank you. So price reacted from our levels perfectly. Then they dipped very nicely. And after price did that, it went ahead, then bought again. Yeah, you guys can see. Where did it buy? Support break becoming a resistance. But there is this formation. You guys can see. I hope you guys can see this. Yeah, this is what you call a pure bullish. Yeah, it tapped there, then went up. And this you can see from here. I just want you guys to see this well. Yeah. When we're here, remember, market is bullish. The trend is bullish. Why? Because we have this shift to the upside. Remember, this, okay, the shift happened here. I believe not many people could have spotted that. Why am I saying that? If we go to candlestick, a line chart, you'll get to see that this is a bullish, this is a bearish, then bullish. So this was our shift. And after having a shift, we had that outside formation. So I did not expect price to go below this. Yeah. Regardless, weekly, daily, or whatever, I did not expect price to go below that level. Yeah. Yeah. So we got that, price reacted from there, closed above, then we short to the upside. Now we have this level. So price comes, taps, then rallies to the upside. Why? We can see, we have seen that shift we got from the daily time frame over here. But on the weekly, we also have this shift. So why did I pick this and not this? This price body break to the upside over here. So it didn't need to break to this level so for me to know that I'm going to be buying. So you could have gotten these buys from here and held. This was the first buys that we could have taken. These are what we call continuational buys because we had a continuous shift. A continuous shift is you've seen a shift and you've had another shift to tell you that it will keep going to the upside. Yeah, because we had a break of structure to the upside, we had another break of structure to the upside. This is how we identify a shift. This is the first shift that we had. Let me mark it as shift. That is the first shift that we had. This is the second shift that we had. After getting the first and the second shift, price shot to the upside. And after price shooting to the upside, it kept rallying to the upside, right? And I told you, price will react at this level. As you guys can see, it reacted. You guys saw it reacted to the formation that I told you here. It had these reactions on the daily. Remember, we are on a high time frame. On a high time frame, you're technically not looking for a point to enter. You're looking to see where is the market going to. Yeah. So we had this shift, price came back to this. On the daily is where we got our entries, this entry daily. Not really on the daily. We could have gone on a deeper level. You could have looked for liquidity engineering on this level to get entries here. Then price shot to the upside, shifted again, created this and this. For this one, price came and consumed liquidity there, then pushed to the upside. We got our sales from that area of liquidity that was there. Then price again came, tapped there, then kept rallying to the upside. Yeah. So I believe that you guys have gotten the idea of how we actually get to be trading, how we get to use our shift. Shift is a confirmation of how the liquidity is moving, right? Now you can see price was moving to the downside. It created a shift. We have this formation that's here, right? After having formation here, what are you guys seeing? Price had broken structure to the downside. It caused a shift, body, wick to body. After it caused that wick to body, what did price do? It created this area of liquidity that's here, broke to the downside. After it broke to the downside, price came back to our level here, inside this inside formation. It's an inside formation. Why? Because price broke. This structure was created before price broke to the sawa. That's why it's an inside formation. So we could have gotten sales from here. It's just a matter of refining it on the lower time frame. Sawa. You get that weak entry, then price dipped. Then it rallied back up. Yeah, and price kept moving. So this one, you could have gotten it because of this open break. It's very simple. It's very simple. Okay, ideally, when we go to a lower time frame to refine, we'll see, but it might be it didn't react because of that open break. It's because of there are some levels there. Some brokers actually tapped this level because we usually get broker manipulations. Yeah, a lot of times we get broker manipulations. So ideally, that's how you actually get to understand that I've gotten a shift in the market. Because over here, you could have gotten this trade. How? Let me cut it here. This is the lowest structure. You come to your line chart. Which is the structure that was made before the low? This one. This is what pushed price to the downside and broke these structures. Look for that level, put your shift. Sawa. If there's a wick, put your wick there. Sawa. We got our shift. Then wick, body. So now that we have that weak body that we have talked about so graciously, come back, check. Aha, do I have an inside formation? I do. Do I have an outside formation? Yes, this one, no, I just have two inside formations. This one, price liquidated it. So we are checking on this one. So that inside formation, what did price do? It came, gave us entries, weak entries, chap. Then price rallied to the upside. Then, after it rallied to the upside, there were liquidities lying below here. The people in the community actually know which liquidities were lying here. They can tell you which liquidities were lying here. So that's why price came. They went in deeply. Yeah. Then they shot to the upside and they kept rallying to the upside. So if we actually missed this entry, we had a way to confirm that we are going to get these other entries that were here. It's technically, you can technically look at key levels. This was a gap. Yeah. After you've had that gap, price reacted there. You took that If you are keen enough, you got these other entries and you are not shy on riding them, yeah. And price kept on going to the side. That is confirmation of liquidity flow, yeah. And that is a conversation on shifts. Now I want to check another chart that currently is not GU. Let's look at your favorite. I believe this is the most traded pair that we have currently. Let's start on the weekly time frame. After going to the weekly time frame, let me cut it to around, I'm going to just to do this randomly. This 2022, let's go back before majority of us started trading or even thought about trading. Now, you can see we're on the weekly time frame. You can even, it works in the weekly, monthly, any, you name it, so it doesn't choose. So this was on the weekly, and if you check the weekly, but ideally most guys can't wait this long to look for trades. So we had this structure. This is the lowest point. You can see lowest point. This caused the shift, the upside. So after it caused the shift to the upside, you just mark the wick. You have your shift. After you've had your shift, you can look for liquidity engineering wherever you decide. Yeah. So shift outside formation. So on this one, it's really funny. Why? Because we have this and we also have this. And we have that gap. This is FXCM. Good, yeah. So by the way, you should be minding your broker. Eh? You should heavily be minding your broker. So on this, we have those two formations. This outside formation consumed liquidity in this low formation, but it had left these liquidities lying down here. You guys can see that. Yeah. So let me play price for a bit, and you guys can see what price usually does. It came to that, it was like it's playing, it's coming, it's not coming. Then all of a sudden, it shot to the upside. It reacted to that level. Then it came back down. Guess where it's going? Did you see what happened? Price gave you a clean entry. Yeah. The clean entry was on a flip zone, by the way, because price usually goes for the flip first, then later goes for the liquidity engineering. So it gave you an entry, short to the upside. Then you can see, continuing forward, it gave you, it has to go for the liquidities that are not consumed. This one was not consumed first, it was on the flip. It reacted on the flip. There was another entries that were there. We could have taken these entries from this liquidity engineering over here. Okay. We could have sold, then came back inside. We could have gotten them these buys, by the way, but let's carry on. Price came, it has to consume the liquidities that are not consumed. Yeah. You can see price rallied to the upside and it went. By the way, in the community from next year, we are looking to hold trades for like 6 months, 8 months. Like we want to start that come next year. So me and Bart Swizy, we are looking for setups that will be holding, and guys will be wondering how are these guys, or how are these guys taking trades and are holding them for like half a year or something. Okay. Because with what we have, it's very possible. You can be getting a trade, you decide this trade, I'm going with 5 lots, you take it, and then it goes until you start feeling bad. Yeah. So after this, you see that we took our entries on these levels here because liquidities that were lying inside here on this level, it's actually a V2V, a proper V2V. Yeah. Took we went to the upside, yeah. And price kept rallying to the upside up until it got to another key zone that was lying there. Then I believe price went down again because markets are fractal. What does fractal mean? They always keep changing. They won't be going up and up and up and up. If they keep going up, it means they're going to get something up there. And if they're going down, it means they're going to get something down. So if you check this, I believe this is where it reacted. It gives you weak reactions where that level, you have liquidities here. I believe Batswezi talked to you guys about reactive liquidity engineering. That's what price went for. Then it sold again. Yeah, so you can actually enter this week. You get a re-entry here. So when you see Batswezi talking about intradays, there are intradays that can become swings, okay? So ideally price reacted from here. We have liquidities lying here. Then it dipped again because I'm expecting price to come back down this level so that we can buy again, yeah? As you guys can see, it's very common. After you see a shift, you expect price to move to the opposite direction. Why? Because you can see here, we had this shift. So after having that shift, price went to the upside, collected liquidities that were lying, because this one tried to consume liquidities, this entry that we had here, it tried to consume liquidities. Our shift was here, by the way, not where I had marked. So after there was that shift, this one had consumed liquidities that were lying here. On the daily, we will get a shift that was inside here. Yeah, we get a shift. Let me just show you instead of just mentioning it like passing by. We get to the daily time frame. On the daily, this is the highest point. This is where we had our shift, lowest point. This is the lowest point. You mark your shift. After you've marked your shift, this is the confirmed flow. There is the non-confirmed flow. The non-confirmed flow, there's a way we actually trade it. But since we're talking about the confirmed flow of liquidity, let's stick to it so that guys can actually understand that. Maybe Batswezi tomorrow we'll talk about the non-confirmed flow. But there's a way it's actually traded. It's not just traded willy-nilly. Yeah? So after we've had this shift over here, it went created this outside formation. Price came, consumed a bit of it, then went down. But after getting to the open break, I keep telling you about this open break. Yeah, price opened, then broke above that open. Yeah, price will come. If you get this, by the way, don't feel shy. Put your trade, put that one lot. Yeah, but you have to be in line with the flow of liquidity. Yeah. So I'm not telling you enter that lot. You can enter on that week, or you can, if the week is, if this body is small, then you can put your entry on the week. But if the body is sizable, put your entry on the body. Put your body entry on the body, then you go long. You don't feel shy, you hold it. Sawa. Open break is found on the daily, 4 hour and the 1 hour. Don't go lower. Don't go lower unless you want to die. Yeah. You can be targeting wherever. Yeah. You had a 30 pip stop loss. This is on the daily time frame, by the way. You had a 30 pip stop loss and you collected 200 pips. Yeah. This is on the daily. We could have refined it and gotten a stop loss inside here. You guys know how a stop loss can be. It can even be 5 or 4 pips. Sometimes you can get 1 pips, but the brokers don't allow something of the sort. So yeah, you could have gotten, this is a 1 to 21 RR. Yeah, it reacted on a pure bullish here. This open break, it reacted on a pure. Then price shot to the upside. Yeah, it went ahead and took our profit. Then over here, if you check keenly, we have this area of liquidity that's here. Now, price came, wicked that area of liquidity. You can see we have a shift. This is an inside formation. If you check the 1 hour, the 4 hour, you'll see the inside formation. There was a flip level that was there. Price stopped. If you decided, I'll take the trade in accordance with this body closure, You could have also gotten it. Yeah. So it's up there, then short to the downside. And it went like crazy. This is some crazy pips from here. And you guys know that the stop loss will have been very small. Yeah. Unaokota. And the way you take your trades, you even wonder, am I really not getting 1 to 7, 1 to 21? Yeah. This one, it looks small. This one, it's like 10 pips. Even this one can be 5 pips. And if it's 5 pips, let me say it is 10 pips. So let's not put it in a way that guys start to tell us you're doing something that is not making sense. Let's say it was 10 pips. So after getting that 10 pips, I'm only doing this because I want to do it as fast as possible. You've gotten 10 pips and your RR is 1 to 36. This was 1 to 20. This is 1 to 36. You take your money because there's this structure over here, and you guys can see with this structure here, this is not an open break. Why? This one did not close with a body closure. Price came, consumed liquidities that were on the inside kabisa. You guys can see liquidities that were on the inside kabisa. Then it shot to the upside. But in matters regarding this, the shifts actually you actually have to look. Did the shift come from the daily? Was it confirmed on the weekly? Was it confirmed on the monthly? If it came from the monthly, you expect it to move more. If it came from the daily, you expect it to move, but not as comparison to the daily and the monthly and the no. If it came from the daily, you don't expect it to move as much as the one on the weekly. If it came from the monthly, it is going to move the most, because if you see a monthly shift, then you expect price, if it comes back to that level, it will move and move and move for months. You know, like this trade that was here, this trade that was here, that we have marked over here, we could have gotten those entries. Yeah, we know that it was refined from the weekly or the daily, whatever, that level that's marked there. So for that one, we had a shift that was here, a clear one, undisputed. We had an inside formation. Price came to the inside formation and it moved like crazy. Yeah, we refined. There's a way we refine. So if we actually got it over here, it's a short position. If we actually got it from here, said we didn't refine it much, but we did some refinement. Yeah. We will expect price to go. So these reactions, it all depends on the cycle. Yeah. It can go to levels where, let me check the monthly. Where did we get the push to the upside to get that monthly trade? We got the push from here. So the first TP would have been here, but as much as the first TP would have been here, we would expect price to go lower to these levels or even lower. Okay. You guys can see this is the monthly candlestick. You can see price goes, it goes. You can see the first TP was expected to be these levels, but what happened? It went lower. It went lower, and I expected price to go even lower. Your second TP was tapped. This was the first TP. This is the second TP. Yeah. And then if you're looking for entries, say from these levels here, and you're saying I'm going to hold it till this level, you could have gotten your entries here. But now Remember, we are on the monthly. The monthly had shifted. And if the monthly had given you a shift, number one thing you expect, the push that told price to go to the upside, this was supposed to be your first take profit. You get a shift, then price comes back to the inside formation. Where did the price push to the upside? This was the last candle. That was the lowest candle that caused the price to get to our entry. Yeah. And if that entry is having a big stop loss, there's something that we do to reduce our stop loss, the refinement. Yeah. So we could have gotten a refinement somewhere around there, then we ride it. Because this is like very, very, very big. And ideally, we won't be having this 50 pips stop loss. We could have been getting a very, very small stop loss. Ideally, let's say I'll stick with 10 pip stop loss. Yeah, you have that a small 10 pip stop loss of yours. You get it there. After getting your 10 pip stop loss, you ride it. So you get a ratio of 1 to 100 na umetumia lot ya 5. So unajisikia kama wewe ndio ule msee, yeah? And ideally, if you had confirmed with the trend was bearish. So you know, even if it gets to this level, I'm still expecting it to go lower, this level. So up until this level is when I'm expecting to see price reactions. So let me put this. Up until this level is when I'm expecting to see reaction. So you've held your trade, you've held your trade, you've held your trade. Then I don't know if I should increase the speed. I think the speed is well enough, more than enough. So price comes, it comes. The hardest bit about all this is just waiting. Waiting can be your killer. So ideally, this price reacted from this level here. There's like a flip that's lying here. That's why you got to see price react from there. So after price react, and remember this is a monthly level, so there is impure liquidities lying here. So after you've seen that, price shot to the upside. You could have also gotten snipers from here. Small stop loss, and you've ridden this. The sad thing is, I believe not everyone can hold the price for months like that, because this was from 2020, held it all the way to 2022. 2023, okay, you get another entry from 2023, then price starts pushing to the upside, yeah? So the key on all this is you guys get to identify how a shift looks like, how to spot a shift, and how to get to know the trend. The shift helps you to know, am I going up? Am I going down? Yeah. What am I anticipating? You know, and it's not only on the monthly, weekly, daily. You get shifts even in lower time frame, even 3 months. So in 3 months, you can see we had this break of structure to the upside. There was that reaction. You can check this was the lowest point. There is this inside formation, and there is this, to be more precise, these levels here. Let me just take this because I don't want to draw again. This outside formation. So there's something called confirmed name. What's this? It's something in the lines of broken but qualified areas of liquidity. Now this one is in lines with that, because why? Price came, it broke this level. Let me just zoom in. It's the 3 months. So in this 3 months, price actually it didn't quite break, it just tapped it. So it was when this 3 months it closed here, it confirmed to us that we are bullish. So we could have gotten entries from this level. That's if we cut it here, then go to the monthly time frame and get to see what happened in that month, because it took like roughly about 3 months. So if we run it, we get to see it came back inside. After coming in, that was our indicator. After it went just like it went deeper, we got our confirmation. Like you see there, this is where we got our confirmation that price is going to be bullish. Because there, can you see that candlestick when it did that? It told us that we are going up. Sawa. After we told that we're going up, we would have looked for entries down here. Then we short to the upside. When this candle decided, I'm closing here, I know that I'm going to be taking entries from these levels here. And I will shoot to the upside like nobody's business. And price kept on rallying to the upside, as you guys can see. So the shift, if you are able to mark it and you are able to understand how to look at your time frames, you get to know how you can actually accumulate like very big small pips. It all depends on how you guys get to confirm your liquidity flow. Yeah, because we had a shift here, then price came back down. So looking for entries. And if you're looking for entries, you know that price will keep pushing to the upside. No pressure. You get to see how price moves to the upside. You would have looked for entries from around there. So you just wait. The hard thing is waiting, because you will want to fidget, you will want to press your MetaTrader. Yeah, you will want to do all these things. That's the major issue when it comes to traders. Because once, by the way, you can see this is an open break, like price opened here, then it broke to the upside. So price will react over here, or it will go a bit deeper, then it will keep shooting to the upside. It's something that happens over and over and over again. It's something that you guys should get used to, yeah? Because after it tapped here, price just kept rallying to the upside. So if you would have been waiting for price to come down here, shock on your face, as till date price hasn't gotten back in here, and I don't think it will be getting back in here. Why? Oh, it went back inside, but did it come back inside to a level? Let's wait and see. Look, it's still the open break. Yeah, this one. Yeah. So going forward in the next coming months, I'm still very bullish in matters regarding these ones, because we've already gotten to, yeah, it reacted on the open break on the monthly. On the monthly, we had our key level here. It didn't tap. Why? Because if you go on the weekly, you guys need to get to know about what's this thing called? It's called time frame coordination. Time frame coordination used in hand with shift coordination. It actually helps you get to understand how you'll be taking your trades, how you'll be looking at the markets, and it's a big structure that helps us in understanding how we trade. Because if you check this, yeah, this thing, my keyboard is very whoosh. If you check this, there's this type here, this candle type here, and it's on the daily. And if you confirm on the daily, oh dear, to confirm on the daily, what do we see? Price, I'm sure price came and reacted there. Very sure it reacted there. But mostly it reacted on a sleeper zone that was here. Is price came back in, came back up here, then shot to the upside. So it's just a matter of you refining that specific trade. You can see it tapped there. Then price shot up and it kept going to the upside, yeah. So if you get to understand the shift and all that, it makes things easy for you, because why? You can actually get to understand and get to predict. Sometimes maybe where you can go wrong is when you have what's this thing called? You have a bias that is not in line with the market. Like this trade that I got, this actually I got this year around August. Yeah, I got that trade. It went HTP, then it sold. As you've not really checked the structure well, and if you haven't checked the structure well, it ends up messing with your time frame coordination and all that. Yeah, your bias, because bias is usually personal, and most of the people don't go with the actual bias of the trend. They actually go with their personal bias. There's the trend, market structure, and the bias. Now, I would like to have your questions come in. So if you guys had questions that you wanted to ask, if you guys had anything that was burning, concept of high, low, yeah, the concept of high, open, high, low, close, open, low, high, close, that is more on the candlestick anatomy. If you understand the candlestick anatomy, everything is well. Between inside and outside formation, where do we look for entries? Look for entries on both the inside and the outside. But you have to understand the time frame coordination. You have to understand liquidation, because at times price will come to the outside formation, then go. Price will come to the inside formation, then go. What of a pin bar and an engulfing? Now, I believe everyone understands what an engulfing candlestick is. An engulfing candlestick is when a bullish candlestick covers a bearish candlestick, or a bearish candlestick covers a bullish candlestick. Here's an example, sidebar. Here, you can see this. This is a bullish candlestick that was engulfed by a bearish candlestick. I hope everyone can see. Sawa sawa. And if you come here and check, what do you see here? Shift. Sawa sawa. If you see a shift, then price moves to the downside. Actually, the shift is here. And you see there's this whole thing is the inside formation, but we had the engulfing there. Sawa sawa. After you see the engulfing there, what does price do? It comes back, taps it, then moves to the downside. So it's a matter of you getting to know how you're going to be taking a trade here. Because I told guys who were with me from last week, I am not anticipating price selling from here after we got the sales from here. I actually told guys, me I'm buying. We had but Suzy can tell you guys, we had a proper discussion in the group between, I think it was me and Kim. I was telling Kim I'm not looking for buys, but that was on GU. This is EU. I believe this is EU. Yeah. I told guys we had these entries from here. I can show you. We had the entries from here. I'm still holding the entries. I'm waiting to see what price does in the monthly time frame, because I'm not anticipating it to go bearish at all. I want to see maybe price come back inside here or here. So for GU, EU, I'm still bullish and I'm waiting to see. I'm not bothered so much. Yeah. So if I'm getting intradays, maybe sell 50 to 30, 50 pips. So then, but mostly I'm looking for buys. My mind is so hooked on buys after I got the buys from here. So if price decides to come back, I'm buying. If it comes back again, I'm buying. If it dips again to around these levels where we have impure liquidities, I'm buying again. But that will all depend on the market structure that I'm seeing and the liquidation process. I'm not just buying because bullish. No, there's a go-to of how I'm buying. Yeah, because all the areas of liquidity that we look at, they are all engulfing candlestick, a bullish that engulfs a bearish. But there are different ways on how we look at them. Is this affected by fundamentals? All of our trades, we don't. Okay, you will get to understand if you get to see our trades. We don't trade news. We see no need in trading news. There is no need for like haina haja ku trade news. When people get excited about news, I am always like, okay, I see no need for it, because after news, See over here, guys was saying buy, 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 buy. News came, gave you an impulsive move to the upside, but price came. I entered from there. Then price shot to the upside. So for me, I am not in lines with the news. I don't care about the news because the news technically they report what has already happened, and we know if we hear there's war in Ukraine, we already like the news they are reporting what had already happened. So if it already happened, you already have prior knowledge to that. You don't have to wait for Jerome Powell to come and tell you, oh, we are cutting the Fed rates or we are increasing the rates. You don't need that. With the system that we have, as much as we pay attention to, we really pay attention to the news that's coming because at times you can be someone who's taking intraday. You'll need to know, I'm taking my trade, I'm taking my profits from here. That's when you actually care about the news if you're already in a trade and it's intraday. But if you are taking a trade and you're swinging, you will have a 5 pip stop loss from here. Maybe if you gotten in kidogo there, 5 pips zako ziko hapa chini, price comes, gets you in, draw down kidogo. Sometimes it's 0 DD, then it moves to the upside. Or you get these cells from here, price comes back down, you take your profits, then price shoots to the upside. That's in matters regarding fundamentals. Does that mean that the concept applies on all time frames? It applies on all time frames, but you have to understand liquidation. You have to understand how liquidity takes place and how liquidity happens. In the case of a shift with both inside and outside formation and breaks outside the formation and reacts on the inside formation, will the outside formation break be a shift? It can be a continuational shift, and I keep on insisting if you've understood time frame coordination and also understood market structure. So it can be a continuational shift to the downside. So you will look for if price created the areas of liquidity while going away from the outside formation. Let's see. Like on this one, you can see we have this shift over here. We have this inside formation. We have this outside formation. So price came to this, then it came down, broke. Then it came to this, then it broke. This is a continuational shift to the, you had a continuational shift to the downside. Price came, consumed liquidity, dropped, created this area of liquidity. We had a shift, continuational shift, because this is an outside formation. So why? This here we didn't have a breakout structure. We had this breakout structure, came, consumed. So this one broke this structure to the downside. So shift. After getting that shift, this one, this leg, it created this outside formation. So on this, we had this shift. Price came, consumed liquidity, tap, gave this as this entry. Then we are pushing to the upside. Yes, you can check on the weekly. You had this. I need to show you this. You can check on the weekly. We had this break of structure to the downside on the weekly. That's why people are looking to sells on this level. But I believe that we are still bullish. Yeah, I believe the charts are not lying. Yeah, we are still very bullish price, and I believe this week price will close above this trend line that I've currently drawn. So on the monthly, we have this area of liquidity. Price broke to the upside. Yeah, this is why I am telling you guys I am bullish. So price closed, did not go below this. It just reacted on the areas of liquidity that were here. Then price pushed to the upside. So I've explained about the outside formation can have a shift, like a continuational shift, but you actually need to understand the liquidational process, the market structure, and the shift coordinate. And also you should have that confirmed flow, because if you don't have the confirmed flow, then you can't really get this very well. I believe that I've done above and beyond. The session was supposed to be 1 hour, and I've gone to 1 hour 30 minutes. And I believe that I've Robert, I apologize. I did not see your message sooner. I would have gone with a different chart. I believe that one you could have seen. I would have gone with that one, but I apologize. I hope that you didn't miss things, but I believe that everyone understood, yeah? So you mean whenever every market breaks invalidation point, that automatically becomes a shift? No, an invalidation point is not really a shift per se, because an invalidation point can be a flip. Yeah, an invalidation point can be a flip. What do I mean by a flip? This is what I mean. Let's see. We had this V to V here. Wow. When you had this V to V over here, price came, consumed liquidity. After consuming liquidity, price shot to the upside. Now, this point was when we were thinking about selling, but price broke. If price broke, you got buys. So it can be used as a flip. Sometimes it can become a shift. It's not, it's like the markets, it's fractal. So you need to put all these concepts together with each other so that you can actually get to understand better. You can be able to understand better. We've not talked about other time frames. Steve Omundi, can you please elaborate on me not talking about other time frames? You're talking about the lower time frames, like 30 minutes, 15 minutes, 1 hour, 3 minutes. That's what you're talking about. What's the minimum pips you can put on the market? What do you mean, Lowell? What do you mean, what's the minimum pips you can put? Like the stop loss. The stop loss, you can go from 15 to 5 to 1, but 1 is not really recommended because you're not using a zero drawdown account. Yeah. Okay. I believe I've answered a good majority of you guys. And I believe that if you have any questions, you can ask later on. So I believe we can end the session because you guys don't have more questions. And I've talked so much. Is everyone okay? You can put a thumbs up or say yes as we wait for tomorrow's session, because I believe we've covered the shift coordinate very in depth. Big nice one. Lavin, Dennis, So if you guys have gotten value, I believe you can go to the YouTube, comment down, say 1 or 2 things, or you can do whatever. Yes, I think we finished. We can wrap up the session for today. Yeah.
Yeah, it's been amazing. It's been an amazing session. So tomorrow is the last day of this masterclass. The session started last week on 24th. So we were just doing an extension of this week. So remember, it was a free session. So we're going to end tomorrow. Tomorrow is the last day. It's going to be one of the best days that you're not supposed to miss. Please, at exactly 8 p.m. tomorrow, I might decide to give an offer and consider, because I've been getting a lot of requests. Guys want deeper mentorship. I think we're going to share the course content and all that tomorrow and show you what is inside the content that's supposed to be covered for you to master our strategy. So thank you so much, guys, for being here. If you've been consistent, I believe you're getting value every single day. We have many other traders in the community who can also share their experiences, but I believe tomorrow we're going to be doing that. So see you tomorrow at the same time at 8 p.m., same link. We continue learning as we, by the way, Sage, we're going to finish up on the book. There's something I'm also drafting from my end. We're going to come up with a playbook that contains all the terms in our strategy, the structures and all that, because it's not outside here. Now, then guys, go on YouTube, eTribeConcept.com. eTribe Concept. Look for this video. If you have my number, go on my status. ask questions under the same video, comment anything that you've learned. We shall use it as a way of answering your questions tomorrow when we get started in the session that we're going to have on Friday, which is tomorrow. Thank you so much. You guys have a lovely night. I'll see you.